Now, there's a lot of questions that someone is a beginner, they have in their minds, and sometimes you just don't know how to answer those questions. Well, I'm here to answer those questions for you because I was once in your shoes at some point. Right. On our last session on the beginners class, we learned about how to identify my candles, how to read my candles. We generally spoke that price action is basically candlestick formation. And we learned about the three most important candlestick formations that we have, and two of them I gave the confirmation. Right, just to give you a flashback, we learned that price action is candlestick formation. We learned that we have what we call morning star patterns, we have what we call evening star patterns. And what we learned during that session was when we have an evening star, this is just going to be a quick walkthrough, and our evening star is going to look like this, right? And what we expect is when we discover that this is our evening star, we expect what? We expect price to be playing in what I'll call a zone, right? And let me mark that zone. Okay, let me put it here. And that zone, we said we can only identify it if we box our evening star. Now, what we expect is we expect price, or we expect our candle to come and close below our evening star. And when we take the first entry is an aggressive entry whereby as soon as price reaches half of our push candle, we start taking entries, and as soon as price closes below our box or our zone, we take another entry, which is called a safe entry. We say that we put our stop loss just above the wick of the high. Why? Because we don't expect price to come and break that high, right? And then we also talked about how we target previous areas. And which previous areas are these? Let's say we had our perfect market structure where we were having highs and lows, highs and lows. What we now expect is when we now start selling, our take profit points are previous lows. We target our previous lows, meaning that we'll be having them as TP1, TP2, TP3, TP4 going onwards. Right. This was the example of the evening star, and then the morning star was the opposite of this. Remember, this is just a flashback before we start our initial session, and then we said our morning star, what you want to see is we want to have a push candle, a signal candle, and a confirmation candle, right? And we said soon as we saw our push candle and our signal candle, what we would do was we would mark a box on it, and what we expect price to break out of that box or zone, right? So this is our tail, which is going to be the main thing that is going to tell us that this is a signal candle, right? Forgive me if I've put it on the wrong place here, is because my trading view is not perfectly aligning it, but we said as soon as we reach half of our push candle, we enter, and as soon as we close above half of our push candle, we enter again. The first entry being an aggressive entry or a risky entry, and then the second entry being a confirmed entry. Now, if we put market structure, this would be our change of character, and this would be our breakout structure. And remember, this trade was coming from somewhere, giving us lows, highs, lows, highs, lows, meaning that when we're now targeting, our previous highs as our take profit points. So generally, this is what we learned on our first beginners class. Now we are going to continue on how to identify a trend and how to trade perfectly after identifying a trend. Now, What is a trend? A trend generally means market direction. When we are buying or when we are going up, we consider that we are bullish. And then when we are going down or when we are selling, we consider ourselves to be bearish, right? We have different types of traders. We have traders that trade synthetic signals, and we have traders that trade currency signals. The difference between synthetics now is, if you check with brokers that are like Deriv and World Trade, right? So these brokers, the synthetics that we trade here, for example, boom and crash, volatility 50s, FX volume 80, the pain and gains, what they lack is they lack what we call fundamentals. They lack what we call fundamentals. Okay, let me type correctly. They lack what we call fundamentals. Now, with currencies. Currencies have what we call fundamentals. Right. Currency have what we call fundamentals. Basically, what we mean when we talk about this, we cannot trade news on synthetics, but we can trade news on currencies. I repeat again. We cannot trade news on synthetics, but we can trade news on currencies. The difference is fundamentals. And fundamentals, these are basically real-world factors that move the market or currencies. I hope you understand. Fundamentals are basically real-world factors that move currencies. For example, weather. For example, politics. Synthetics cannot be moved by weather or politics. Synthetics cannot be moved. Okay, let me just allow someone here. Synthetics cannot be moved by interest rates. Right. But currencies are. That's why you see that we don't talk about trading currencies, or we don't talk about trading fundamentals when we are trading. We don't talk about trading fundamentals when we're trading derivative or world trade. Now, the rest is the same. How you read market movement, the order block theories, the fair value gaps, the rest are the same. But I've personally discovered that currencies, they are more reactive. Why? Because that is real-time human behavior within the market. So how do we read the trend? Right, so I'll wrap this off. How do we read the trend? We read the trend using different methods. I personally use what we call market structure, whereby I know that my trend is supposed to give me what we call highs and lows, highs and lows, highs and lows. And if I see my price picking itself up in a structure that looks like this, then I know that this is an uptrend. And then if I see my price picking up itself in a structure that looks like this, then I know this is a downtrend. Now, remember, with different types of traders, with those that use what we call smart money concepts, with those that we use that use pure price action, with those that use BTMM. The way that someone reads the market using BTMM is different from the way that someone reads the market using price action or SMC. In BTMM, we use the involvement of indicators, where someone will simply tell you if my 200 EMA line is above price, then it's in a uptrend. And then, if my 200 EMA line is below price, it's in an uptrend. And if my 200 EMA line is above price, it's in an downtrend. Right. And then, mostly, what a BTMM trader would do, I'm just telling you how people read the market differently. When using BTMM, you now use what you call levels, whereby you use what you call your level 1, level 2, level 3, your level 1, level 2, level 3. And by so doing, you can know that you are in an uptrend or in a downtrend. Basically, why I'm saying this is we read the market using my different strategies based on the concepts that we use. Generally, for me, in my 6 years of trading, I've generally found out that if I use smart money concepts to read my market direction, almost always I get it correct, and it's very easy to understand. Now, before I go any further, when you are trading currencies, you should know that you have what you call sessions. I repeat again, when you are trading currencies, you have what you call sessions. Right, we have what you call the Asian session. We have what you call the London session. And then we have what you call the New York session. I'll write it down so that we understand. We have what you call the Asian session. Sorry. Let me type here. We have what you call the Asian session. We have what you call the London session. And then we have what you call the New York session. Right. So if we are using Zimbabwean time or Southern African time, our Asian session starts from 2 a.m. up to 11 a.m. CAT, Central African time. And in this session, there is slower movement. The market is slow. And the market is also, it has what we call lower volatility. So we can say less volatile. Less volatile. So this session is best for what we call range trading. Why? Because there are no big breakouts that happen during this session. And at the same time, even if you put bigger lots to your trade, you actually find out that, oh, okay, you can put a bigger lot, but then the movement is not huge. Right. And then we have what you call the New York session. The New York session is from 3 p.m. up to exactly 000. And when this session starts, the market is usually very volatile at the start. Sorry. I skipped the London session for you. I thought I did. I'm very sorry about that. We did the Asian session, which is from 2 to 11. And then we have what you call the London session. The London session starts from around 10 a.m. up to 7 p.m. This is Zimbabwean time or Central African time. And in this session, the market is highly volatile. So I'll type it. It's highly volatile. And we usually have strong moves within this session. And in this session, this is one of the sessions that's best for trading trends, breakouts, and this is where you find your real setups for the day. And if you look at it, this is where real traders focus on this London session. Right. Then we have what you call the New York session. And this one is from 3 p.m. up to 000, which is midnight. And when this session starts, it's very volatile where they start. And this is where most news is released. That's where you see most people saying, oh, we are trading news today. We're trading CPI, we're trading fundamentals, we are trading just generally news. This is where major news happen. Right. Now, there is what you call a London plus New York overlap. So I'll type it down here. A London plus New York overlap. We have what you call a London plus New York overlap. And this again is from 3 p.m. up to 7 p.m. And this is where you find the most highest liquidity and biggest moves within the market. And most people, they call this the money time because they maximize as much as they can in this session. So now someone would ask, what's the best time for me to trade on these sessions? Should I trade the Asian session? Should I trade just the London session? Should I trade the New York session? Or should I trade the London plus New York overlap? My recommendation would be don't trade all day. Don't stress by trading all day. Why? Because when you trade all day, generally you want to keep your discipline. Generally you want to focus on one major or two major setups for the day. You don't want to trade everything that or anything that moves within the market. So I'd recommend you focus on the London Open plus New York overlap. So when I talk about the London Open, we are generally talking about starting your sessions at around 10 a.m. in the morning up to somewhere around 3 or 4 p.m. This is where you get better setups, and your trades, they basically don't stress you a lot. And if you focus on trading the Asian session, it will actually test your patience at the end of the day. I hope we're understanding. If anyone has a question, you can feel free to raise your hand before I proceed on. So if I am a trader, basically what I'll do is, let me mark this for you. Let me mark this for you. If I am a trader, using the times from the time zone that you're in, from around 9:30 to around 10:30 in the morning, what I'll do is I'll just usually prepare, mark my levels, my general daily bias, and then, okay, let me type it for you here. Sorry about that. There's something that happened. Okay, let me remove this. So generally around 9:30, 09:30 to around 10:30, what I'll do is generally prepare. By preparation, I mean just marking my levels and my daily bias, right? And then around 10, somewhere there, up to 1 p.m., I'd focus this on trading London setups or London session setups, right? And from around 3 to 6 p.m., this is the best time where we get trade overlaps. Right? This is the best time where I'll trade my overlaps. So I'll just mark it as best. Right? And then just after 7 p.m., I would completely avoid trading or over trading. If I had a setup that I was holding, I would generally just keep it. And as I go through at the 7 p.m. mark, I would leave it, try to see if it's still going my direction. If it is, I would hold. But if it starts giving me range setups, I'll then exit. If I'm taking profit, I take my profit. So the trick is not to turn this whole your day calendar into something that you can say, I'm chasing the market all day. But if you use these time frames just to do this, you actually see that at the end of the day, you're gonna have a good strike rate. Right. So let's go on. I didn't want to talk about sessions, but I found myself talking about sessions at the end of the day. I wanted to focus on reading market direction, but since now we know the times to trade when we're using our sessions, which is the London, the New York, the overlap, what you generally do is you'd also want to know which trades are the best to trade within that time frame. All right. Seeing a question here. All right, it's fine. There's a question that I've just seen here. That's the same question I wanted to focus on. So, if we are trading within the Asian session, so let's put the Asian session. What you would want to do is trade USD JPY. You can write this down. You'd also want to trade old JPY. These are the best trades to trade within these sessions. And then as you move on to the London session, okay, let me type here. As you move on to the London session, like I said, this is the best session to trade breakouts, trend continuations, break and retest setups. The best pairs that you can trade are GBP pairs. Right. GBP pairs. So let me write them down. GBP pairs. Anything that carries GBP on it. And you'd also want to trade my Euro pairs. Right. So generally you want to trade something like GBP USD, Euro USD. And then as you overlap, as you go within the New York session, New York, okay, let me type it down. As you go to the New York session, the best trades or the best pairs that you can trade are USD pairs. Right. USD pairs. What I generally mean is you want to trade your Euro USD, right? Euro USD. You want to trade your GBP USD as well. And you want to trade your gold. This is actually the best time to trade your gold. Right. So I'm having another question. There's someone who's raising their hands. Let me unmute you so that you can ask. Nicole, I've unmuted you.
Say good.
Yes.
Mukundenzo.
Yes.
Yeah, so sorry tinonoke kupinda panoda kungobvunza patiming yemapairs apa kuti yamunoshandisa imimi kuti New York session dzinenge dziri nguvai neLondon session.
Okay, I had already given the times. So what we'll do is I'll post this session again because I'll have to go back again and it. But what I'll do is I'll post this session. You can go through it. I would already mention the times, but well, just to say it in a quick way, I say the Asian session I consider it from 2 a.m. to 11 a.m. My London session from 10 a.m. to 7 p.m. My New York session from 3 p.m. to midnight 000, and then I have a key overlap from the London to New York session, which is from 3 p.m. to 7 p.m. Did you hear me there? Okay, I'm not getting any. I'm not getting any response from him. I'm not sure why. Sean, I've unmuted you. You can ask.
Makadise,
Thank you. How are you?
Ndiripo. Ini I'm totally a beginner from zero. I just want to ask you what's the importance of time kuti uziva kuti time yeEastern time New York session difference iri papi.
I'm not really getting your question. Why is it important to work with time?
Alright, according nekuisa nichiita explainer amapage amanyora pascreen ayo kuti kana uri paasian session uye ekutrade mapage ekutrade
All right.
like kana ndiri kuNew York session disadvantage yei kutrade USD JPY disadvantage iri panenge ichi.
Okay, it's because when the New York session opens, like I said, when the New York session opens, what you see is USD pairs are the most active, and the Asian pairs are less active and less active at that point. They are not really moving, so you don't have any proper setups from that.
Okay.
Yeah.
Yeah, okay, maita basa.
Right. Chikwanda, William J, I've unmuted you. You can ask.
Hello, say.
Yes, how are you?
Yes, yeah. I'm like, unzisoka say. Oh, inunzi NFP chigwe ichochi.
NFP.
Yes.
All right. NFP, what it generally means is we call it non-farm payroll news, and it's one of the most important economic reports in forex trading. What it does is there's someone who's writing on the board. Please, can you not do that? What the non-farm payroll does is it measures the number of jobs anengari added or lost in the United States economy, excluding my farm workers. And it is released by the United States Bureau of Labor Statistics. So what it does is it's released on the first Friday of every month. And usually if we use the Zimbabwean time, it's around 14:30 or 2:30 p.m. in the afternoon. That's when it starts taking place. So it's the reason why it's high impact news is because it's an event that shows how strong the US economy is. So if the NFP, or if we say the NFP was strong, it means there's more jobs than expected, and the US dollar usually strengthens. If the NFP was considered to be weak, it means there's fewer jobs than expected within that economy, and USD usually weakens. So what happens during NFP? During NFP, the market volatility becomes high. Spread, widener, the spread widens, and price can move very fast in both directions. And my pairs are affected with NFP the most are Euro USD, GBP USD, gold, USD JPY. So generally, it's high impact news that measures the US economy in a way. I hope I answered you.
Thank you very much. Yeah.
If you have any question, you can ask.
No, it's okay. Thank you.
All right. We have a question from Adrian. I've unmuted you.
Hello, sir. How are you?
I'm good. How are you?
I'm good. When we started the lesson, you were talking about morning star, evening star, which I assume it's a candlestick anatomy there.
Yes, exactly.
I wanted to ask, what's the best time frame to like read the candlestick anatomy, like what we're doing when we started the session?
All right.
In terms, yes, it's
The
okay.
good
You
thing,
can continue.
the good thing about candlestick anatomy is it's a two-way thing. You can be a swing trader and benefit from it. You can be a scalper as well and benefit from it. I usually like reading from my H4 and then I take my entries in M15. So sometimes when I just take my entries in when I just read it from M15, I know that this is just gonna be something, that's gonna be a quick one. But if I'm willing to hold for a long time, I use my H4. So like I hope you understand that the market is fractal, meaning that whatever happens in H4 also happens in M15. But just that if I find the setup in H4, the move is gonna be big. But if I find the setup in M15, the move is gonna be average, or it's gonna, just be slow. It's not gonna take the whole range. So now it depends with you. Are you willing to scalp? If you're willing to scalp, just look at it from M15. M15 will give you is good confirmations as much as H4 would. And H4 would give you as good confirmations as M15 would as well.
No, it's okay. Thank you, sir.
You're welcome. Okay, we have a question from Samuel Ryan. I think this is going to be our last question because we've got like a minute remaining.
Hello?
Hello?
I wanted to ask, is it possible to, to teach someone how to enter or execute trades on NFP?
Yes, it is. I'll do a session on that.
Oh, okay. That's
right.
just my question.
All right, it's fine. So we've got a minute remaining, and as we have a minute remaining, this concludes our session. We'll talk more in the group. I'll post this session on YouTube just as much as I'll post it on Telegram. Please, guys, if you're watching this session from YouTube, there's a link. There's a link that I'm putting for you. For both Telegram, I'll put material on Telegram that you can watch. And also for the guys that are willing to join the master program, I've also attached the link that you can just use. I think this was a great session, and I'm happy that we attended this session. As we got our introduction to currencies, I wanted to talk about structure, but we ended up talking about currencies. Well, that's a good thing at the end of the day.